All right, let's get right into it. We've all seen this movie before, right? The market takes a nosedive, the headlines are screaming, "Crisis!" And, well, most people lose their shirts. But have you ever stopped to wonder how a small group of people don't just survive these moments, they actually come out way, way richer? What is it they know that we don't? Well, today we're going to open up their playbook.
I mean, that's the big question, isn't it? And the answer, you might be surprised to hear, isn't about luck. It's not about getting some secret stock tip. It's about a totally different mindset, a completely different approach to money, and more importantly, to fear. While the crowd is running around reacting to every little thing, the wealthy, they're just calmly executing a strategy they put in place years ago.
And that's exactly what we're here to do. We're going to break it all down. These aren't just some abstract theories. We are looking at 5 specific, battle-tested tactics that the rich use time and time again to protect their money and actually grow it when everyone else is panicking.
Okay, so secret number 1. And honestly, this might be the most important one of all. It has absolutely nothing to do with stocks or bonds or real estate. It's all about psychology. You see, in a crisis, the biggest, most important battle is the one that happens right up here, in your head. It's about learning to switch off that raw, gut-wrenching emotion and turn on cold, hard strategy.
And just look at this contrast here. I mean, it is night and day. On one side, you've got the crowd. They're driven by fear, glued to the dramatic 24/7 news cycle, which of course leads to panic selling at the absolute worst possible moment. But on the other side, the wealthy are looking at data, not drama. They're digging into the fundamentals, things like a company's cash flow, its debt levels, to make smart, strategic buys when everyone else is selling.
This quote just nails it, doesn't it? When the noise and the panic are at their absolute peak, that's the signal for the average person to hit the sell button. But for the wealthy, all that noise is actually a sign. It's a sign that fear has created opportunity and that the time to quietly start buying is getting very, very close.
All right, let's move on to secret number 2, and you'll see how this builds on that mindset. So in good times, having a bunch of cash just sitting there can feel, kind of boring, right? Like you're missing out. But during a crisis, that changes everything. Cash isn't just a safety net anymore. It becomes your primary weapon. It's like having an oxygen tank when everyone else is starting to suffocate. And this isn't just some vague idea either. It's a pretty concrete rule of thumb. The wealthy often aim to keep somewhere between 10 and 20% of their entire portfolio in cash or things they can sell in a heartbeat. Now, this isn't scared money. No, this is a war chest. It's dry powder, ready to be deployed the moment fantastic assets suddenly go on a fire sale.
This chart shows you exactly what I'm talking about. See that slice right there? The liquid assets, that's the oxygen we were talking about. It's what allows them to think clearly and act rationally. While other people are being forced to sell their best businesses, their best properties, at a huge loss just to pay the bills, the wealthy can calmly step in and scoop up those exact same assets for pennies on the dollar.
And here's the bottom line on this one. Having cash during a downturn completely flips the script. You're no longer a victim of the market. You become the one with all the power, the one who gets to dictate the terms and grab opportunities that are literally invisible to anyone who's fully invested or worse, in debt. Okay, so you've mastered your mind, you've got your cash ready to go. What's next? Well, let's get into secrets 3 and 4, which are all about building a portfolio that's less like a flimsy house of cards and more like an impenetrable fortress.
For most of us, when we hear diversification, we think, I own a few different stocks. But for the wealthy, it's a whole different ballgame. They're talking about owning entirely different classes of assets. Why? Because they know that in a real panic, stocks and bonds often go down together. That's why they balance things out with stuff like real estate, gold, commodities, even private businesses, things that often zig when the public markets zag.
And here's a perfect real-world example for you. Back in the 2008 financial crisis, while everyone was obsessing over bank stocks, some of the wealthiest families were quietly buying up farmland and energy pipelines. Why on earth would they do that? Because they knew that these kinds of real assets often do really well when governments start printing a ton of money and inflation starts to rear its ugly head. It's a classic hedge.
Now, this leads us to a more advanced strategy, but stick with me here. It's called an asymmetric bet. And let me be clear, this is not gambling. It's the exact opposite. It's about taking small, super calculated risks that have a massive potential upside. So imagine you bet $1, and the most you can lose is that $1. But if you win, you could win $50. That's the idea. You allocate a tiny part of your portfolio, say 2%, to an investment that could potentially return 10 times your money. Your loss is capped, but your upside is huge. It's a powerful defensive play with some serious offensive potential.
This quote just perfectly sums up the whole philosophy. It's not about trying to predict the future or having some magic crystal ball to know when the next storm will hit. It's about building a financial structure, a boat, that's so well constructed and so well diversified that it can stay afloat and maybe even sail forward no matter how crazy the weather gets.
And now for our final secret. And this one is a massive mindset shift. While most of the world is obsessing over the daily price of their stocks, the wealthy are focused on something else entirely. They focus on flow. This visual really breaks it down perfectly. The average investor is on an emotional roller coaster every single day, right? Their mood swings with the daily price movements of their portfolio. But the wealthy? They focus on cash flow, the consistent, reliable income that their assets generate. We're talking about things like stock dividends, rent from properties, royalties, profits from a business. This is money that keeps hitting your bank account whether the market is up, down, or sideways.
And that brings us to what might be the ultimate definition of financial freedom. Think about it. When asset prices drop, your net worth on paper might shrink. But if your income from those assets keeps flowing in, your actual freedom, your lifestyle, remains totally intact. So true wealth isn't just a number. It's measured in time. How long could you live your life exactly as it is without ever needing to sell a single asset? That's the real goal.
So, let's wrap this all up. We've talked about mastering your mind, having cash ready, building a portfolio fortress, and focusing on cash flow. What's the one single thread that ties this whole playbook together?
At the end of the day, it all boils down to this one simple truth. Crises don't automatically destroy wealth. Panic does. The wealthy don't have a magic 8-ball. Their advantage doesn't come from predicting the future. It comes from preparing for it. It's about controlling their emotions, protecting their cash, and building a system designed not just to survive chaos, but to actually thrive in it. And that leaves us with one final thought. Another crisis, whether it's big or small, is going to happen. It's not a matter of if, it's just a matter of when. It's a natural part of the economic cycle. So the only real question is, when it gets here, are you going to be reacting in fear with the rest of the crowd, or are you going to be ready to execute the playbook? The choice is entirely up to you.